It does take us to our talk of the tape. Falling stocks, falling yields, rising concerns about the health of this bull market. For some answers, let's bring in BlackRock's Rieder. He is CIO of Global Fixed Income, head of the Global Allocation Team, and he is here with us at Post 9. It's good to see you. Welcome back.
Thanks for having me.
Is this what a growth scare looks like?
So some of it, I think there's a combination of factors. Whenever you move like this, pinpointing what is the dynamic is pretty hard. No doubt, start with retail sales, Walmart's projections, some of the other numbers were a bit softer. So a little bit of growth. And then I would argue there's a little bit of momentum that's coming out. There's a little bit of leverage unwind that's coming out. It'd be interesting to hear what Tony says about positioning relative to that. I think there's a lot of degrossing that's taking place. That is, and the liquidity in the markets, given, I think risk premia has gone up because the uncertainty is so high. Mm-hmm. And so the depth of some of these markets, single name index, and by the way, cutting across also the rates market, it's just, people are very uncertain, and you see jumpy markets.
It wasn't supposed to be this way. I mean, everything but the Dow is negative since the inauguration. I mean, and the Dow just barely positive since the inauguration. That wasn't the playbook.
No, it's been pretty. I mean, it's been quite a ride. I mean, like I say, a lot of this comes up because policy uncertainty is just out there. When are we going to get tariffs? What types of tariffs? What's the relationship U.S.-China? Putting all that together, anybody who can tell you, gosh, I figured out my model on growth or inflation without a wide error band, I think is lying. You can't do it. And that's why you get these jittery markets and why risk premia has gone up.
It sounds like you are talking about a lot of the same things that, let's say, Ken Griffin of Citadel has talked about in the last few weeks. A lot of uncertainty around tariff policy, a lot of uncertainty around what have been our alliances for decades, seemingly being unraveled. Mm-hmm. Is that going to be a constant overhang on this market?
So I think it's why risk premium is higher. I think it's why the liquidity in the markets is going to be higher. Listen, at the end, I'm doing a presentation Thursday on zooming out. And so actually the title of it's going to be, you can see better sometimes when you take off your reading glasses. And so the reason why I describe it as such is if you focus on every single headline, you can really get distracted versus what's the big picture. I still think you talk about pressure on some of these tech stocks. Mm-hmm. Tech is still going to take us to the next level in terms of growth. The spend on AI, it was interesting watching the Microsoft back and forth. That's still fundamentally going to work. Do we have to pause a bit? And by the way, the notional sizes that people have of some of these equities has gotten pretty large. To manage your risk going into earnings, like a big one tomorrow, and when the notional size becomes so significant, is tricky in a market that's filled with uncertainty and illiquidity.
It sounds like, though, you're going to tell the room on Thursday, try and ignore the noise.
Correct.
In the near term.
Correct.
And focus on the prize of what we think is still coming. Tax cuts, deregulation, better economy.
Yeah.
Animal spirits, maybe, eventually.
Yeah, I still think you have that. I think you have to be respectful of the data. And by the way, it was interesting. Last year, we got at about the same time this growth scare. Remember, like Fed's got a cut; they're way behind the curve, and then it happened again. Listen, I think the U.S. economy is still in pretty good shape. I think you've got consumer, a little bit of softness here. You see it in some of the retailing names.
Sentiment. I mean, the number today was confidence was bad.
So one thing I find interesting, surveys, confidence are not nearly as robust as the actual data. But when you start to see big companies that say, we're seeing a little bit of softness, some of the quick serve restaurants a bit softer, that you've got to think of maybe the consumer is pulling back a little bit. Is it going to roll over? Is the economy going to roll over? You've still got low unemployment. You still got good wage growth. So you've got leverage that's in a pretty good spot. So I'm confident the economy is in good shape. At the margin, we're going to soften a little bit, but we're softening some pretty strong levels.
You think that's why yields have been coming down?
Yes, I also think there's some short covering going on. I think people all got on the side of, including last week, European rates could move higher. You get more spend, you get more defense spend. I think people have gotten on the wrong side of that. And then you put that with a cocktail of, gosh, there's a little bit of growth that you want to watch slowing down. So that's pushed it. I quite frankly, I think you can sell a little bit into this. I mean, this is a pretty good move in a Fed that I still think, including some of the commentary today, a Fed that I still think is on hold for a period of time. They're going to watch the data like we all are.